Good afternoon. This is Keith Brand of Moultrie, Georgia, with some cash commodity commentary for Friday. It's about 3 o'clock Eastern Time. Markets off really to a raucous start the first week of the new year. We, of course, had fiscal cliff nonsense. We've got the president on vacation in Hawaii spending $1 million a day. We have all these other financial and political turbulences. Also, the Federal Reserve came out just yesterday and hinted at the need to raise interest rates this year. As you know, they've been talking about holding rates down through 2015, but I think they're getting a little nervous. They've been buying a lot of Treasury bonds and putting them on their balance sheet, and I think they're beginning to think they got too much of that stuff. So that QE, that quantitative easing, that stimulus is what we're talking about. The Federal Reserve may quit that, may halt that, or at least slow it down. That would cause interest rates to rise, take the dollar up, and that would in turn, of course, make it more difficult to export agricultural commodities or really any kind of export. To that end, we had a pretty nasty sell-off in a lot of markets today. Cotton did come back, though. Spot cotton fell down about 170 points, but finished about 30 lower. And for the week, it finished about 40 up on the week. New crop December went down precipitously, but it was able to come back and finish above 7,900, only down 37. So pretty encouraging there. Over in the grains today, I think the farmers are about to stop selling the market because the price is getting too cheap. The exports weren't good at all. We actually had a marketing year low on corn shipments. The crop in South America is improving, so new crop corn was down over 15 cents today, back under $6, pretty nasty. March corn, down about 8 cents. I think we're doing a little bit too much overkill in here, and we could see the market certainly rebound up. After all, we don't have the crop in the ground. We're still in a drought condition in the Midwest, and even though South America is improving, every year they get a nice-sized crop, and they have a difficult time marketing it because of logistics, getting it to port and that type of thing. Beans today almost did a downside breakout, but they hung together. New crop beans were still down 15 cents, and below really right around 12.80. We can't help but think as we go into next week, we've got a supply-demand number coming out. We should see some short covering into that. I think, like I say, it's come down too fast, too hard, too quick for fundamental justification. And so when these numbers come out next week, we really could see the markets come back some. I'm not particularly bullish of corn and beans. It's hard to think we could have another major drought. So with an ordinary weather pattern, we could really begin to rebuild corn stocks and probably soybean stocks to that end. So next week, the first full week of trading, let's see what that's all about, and we'll be on here for you with some more assessment. If you have any questions or comments, of course, give us a call, 1-800-910-1910. Thanks for listening.